lots of things around the economy, the banking regulator and the related spaces. The banking regulator, for example, has already warned that the asset quality has deteriorated further. The RBI blames the macroeconomic slowdown for the rise in rotten apples. What's worrying that the economy is not expected to turn around over the next few months as well. The IMF has also warned that it's likely to lower India's growth forecast and say it's worried over India going off the track in the fiscal prudence. More importantly, there are things that the Reserve Bank of India is doing, including the second leg of Operation Twist that has happened. And the government has mentioned that, or an official has mentioned that divestment of some of the units like BPCL may not happen too. So does that pose a risk to the fisc? So lots of questions to pose and discuss. Let's get in DK Joshi, Chief Economist at CRISIL, who joins us right now on the show. Mr. Joshi, good having you. Thanks much for joining in. A word on how do you think the markets may react to yields in the near term? We were speaking to Anand Narayan in the morning, and he was saying that the market may look to stick with the Reserve Bank of India, and Operation Twist and the second leg that has been announced is the more prevalent and prominent yield impacting force. But we also have these noises of how divestment may not go ahead as planned, and that might put stress on the fisc as we see it. How do you see this push and pull?
Well, I think in the short run, the yields will be maintained around the current levels. But I think eventually, when you come to the end of the fiscal, I think after the budget, we will see some stress in the fiscal numbers unless government cuts its expenditure quite sharply. So at that time, I think there will be some upward pressure on yields. And our forecast currently is yields at 10-year yields at 6.9% by March 2020, which means mild lift from the current levels. So the fiscal pressure will be visible on the yields.
So you are suggesting that from the 6.5, even if the RBI continues to do its version of Operation Twist, the leg 3, leg 4, the yields might still inch higher.
Well, I think fundamentally, I think if government borrows more, I think then it will get reflected in yields. Right now, what's happening is I think the banks also have little appetite for lending in the market in general. So they are putting money in the GSECs. So that's why the demand for GSECs is strong, and I think that's also helping. And the central bank's operation is going to help maintain yields at low levels. I think, but beyond a point, I think if fiscal pressures emerge, I think they will also show up in the yields.
Okay.
At least to the 10-year yields.
Okay. By the way, banks are doing very well today, and I reckon that is in part due to this. When the yields have come off, and the market would want to believe that some of these banks would get the MTM gains. Look at the bank Nifty. It's up about 236 points currently at about 0.74%. A sense, Mr. Joshi, on the health of the banking space, because while we all know that they have fought through a lot of troubles, the SBI chief was on record saying that the worst of the NPA issues and asset quality issues would be behind post-March 2020. Would you be as sanguine?
Yeah, I think we also believe that the non-performing assets of the banking sector as a proportion of their advances will now start heading down. It's right now, as of now, it's a gradual process. I think one should remember that even if they come down, they still remain uncomfortably high. So I think it will be a gradual process. The speed with which NPAs are being generated, I think that has definitely slowed down.
Okay. The other important conversation, Mr. Joshi, is whether you believe there are upside risks to inflation. I mean, crude being what it is, crude at the levels that it is at right now, is that one major threat. But a happy problem to have would be the small signs of rebound in the rural economy, as a clutch of companies are telling us. Now, if that brings about some spurt in core inflation as well, and if it remains sticky for the next few months, what does that do to the inflation print, and thereby does that also strengthen your belief of the yields moving up higher?
Well, I think inflation will. Analysts have scaled up their inflation forecast for this year, and we also believe, I think, that the inflation will average at a rate of around 4%, which essentially means that the second half inflation is picking up. I think as of now, I think it is largely due to idiosyncratic factors. The core inflation still remains weak, and I think despite some pressure points emerging on the core inflation, particularly when the telecom prices are raised, I think going ahead, I think that will show up in core. But otherwise, I think economy is well below potential. So the generalization of food inflation.
Okay, I think we just losing that feed a bit. We'll just try and see if that can get corrected. So, but sorry, Mr. Joshi, we're finishing your point with regards to inflation and the issues that it may pose.
Well, I think the point I was trying to make is that inflation has been scaled up, but I think it is not due to the fact that there is a sudden surge in demand and it's causing inflationary pressures. I think these are supply side shocks from particularly from fruits and vegetable category, which I think happens once or twice every year, and I think that's definitely going to correct. But the some pressure points could emerge from telecom prices going ahead, and maybe the pulses category, which typically sees a surge every 2 to 3 years. I think, but apart from that, I don't see. I think the pricing power returning to the corporate sector so soon that they can start raising prices going ahead. So I think inflation is still, despite the headline going up, I think I would still regard it in the weak category.
Okay. What does all of this do to the currency? We've discussed yields at length. What about the currency? What is your thought? I mean, I'm just trying to figure out if you have some view on what the rupee could do in the near to the medium term. The dollar has started to strengthen a little bit against all major currencies, but that notwithstanding, what do these near-term challenges pose to the rupee?
Well, I think rupee depends on a variety of factors, I think, and one of the factors that will support the rupee this year is that we're going to end up with a lower current account deficit. So that's a comfort factor. So you need, I think, and it also depends on, I think, how the capital flows into the economy continue. So there are some factors which weaken the economic fundamentals, like falling growth and pressure on the fiscal deficit. But there are some other things which I just mentioned, like current account deficit. And if oil prices remain low, I don't see much pressure on the rupee. I mean, as of today, we have our outlook on rupee is that it will hover around 71, a couple of basis points up and down.
Okay, Mr. Joshi, we'll leave it at that. Thanks so much for taking the time out and speaking to us at BloombergQuint and giving us your thoughts.